For decades, we've been taught to believe that nations rise or fall based on productivity, resources, or political strength. But what if the real force shaping countries has always been something far quieter, far more invisible, and far more powerful? Debts that are never openly discussed, never fully recorded, and never truly meant to be repaid. Debts that operate in the shadows, steering economic decisions, rewriting political priorities, and deciding the future of entire populations without most people even realizing the game had begun. To understand how this happened, we have to travel back to the moment when money stopped being a fixed object and became a real story. When governments and central banks discovered that they could create influence, control, and national direction, not by spending what they had, but by borrowing what didn't yet exist. The foundation of invisible debt began in the early 20th century with the emergence of central banking systems designed to stabilize nations after repeated financial crashes. But behind the scenes, these institutions quickly learned that the ability to issue debt was far more profitable than maintaining stability. And the architects of modern monetary policy, figures like Montague Norman of the Bank of England, Hjalmar Schacht in Germany, and later the post-war Federal Reserve, realized that debt could become a tool of silent governance. After World War II, when the Bretton Woods system linked global currencies to the US dollar and the dollar to gold, nations believed they had entered a safe era grounded in predictable rules. But beneath that stability, a new mechanism was already forming. Countries began borrowing from one another, from international institutions, and from their own central banks, to rebuild faster than taxation or production could allow. When the US shut the gold window in 1971, severing the last tie between money and something real, the world crossed an irreversible threshold where debt wasn't just a financial tool. It became the operating system of modern nations, and this is where invisible debt quietly took control. At first, the rise felt like a miracle. Governments discovered they could fund wars without raising taxes, build infrastructure without political backlash, and maintain social programs without facing immediate consequences. Corporations found they could expand endlessly using borrowed money. And global institutions like the IMF and World Bank learned they could reshape entire nations through loans disguised as help. But with each decade, the numbers grew too large to track publicly, and a new category emerged in funded liabilities. Off-balance sheet guarantees, currency swaps, shadow banking credit, and central bank emergency facilities obligations that affect national futures but never appear in ordinary debt statistics. By the 1990s, invisible debt had become the hidden skeleton of the global economy, determining interest rates, influencing elections, pressuring governments to follow policies that aligned with creditors rather than citizens. Then came the breaking points. The Latin American debt crisis of the 1980s, where invisible dollar-denominated promises pushed entire nations into decades of stagnation. The 1997 Asian financial crisis, triggered not by open debt, but by the unseen leverage, and currency exposure flowing through shadow financial channels. The 2008 global meltdown, fueled by derivatives and obligations so complex even regulators didn't know they existed, and the 2020 pandemic response, when central banks issued more emergency money in 18 months than in the previous century combined, creating invisible debts that will shape generations long after the crisis has faded. Each of these collapses had the same pattern: debt built silently, risk accumulated, unnoticed, policymakers ignored warning signs. And then a crisis forced the invisible into the spotlight, only for the same cycle to begin again. And every attempted fix, receiving bailouts, restructuring loans, printing money, resetting interest rates, imposing austerity, has failed, because none of them address the core problem. Modern nations are built on borrowing, and once debt becomes the foundation, removing it threatens the entire structure. Today, invisible debt is more powerful than ever. Global obligations exceed $300 trillion. But hidden obligations, including unfunded pensions, corporate leverage, private credit, swap markets, and central bank backstops, push the real number far higher. Countries appear stable on paper, yet behind the scenes, they rely on complex webs of promises that can unravel instantly with a single rate hike, currency shift, or investor panic. Shockingly, most citizens never feel these forces directly, They only feel the consequences: rising prices, shrinking savings, unstable housing markets, political polarization, and job markets that swing based on decisions made by creditors who never appear on election ballots. And as history repeats, the pattern becomes clear. Nations don't collapse because of the debt they admit, they collapse because of the debt they hide. We see the same signs today that we saw before every major crisis. Rapid credit growth, record high leverage, governments dependent on borrowing to function, interest payments, overwhelming national budgets, and central banks quietly stepping in to prevent defaults no one publicly acknowledges. The truth is that invisible debt has become a silent empire, shaping nations without force, voting, or public debate, using financial influence to determine what countries can and cannot do long before citizens have a chance to react. And that leads us to 3 takeaways. First, national power is no longer determined by gold, land, or industry, but by access to credit and the manipulation of invisible obligations. Second, crises aren't random. They're engineered outcomes of systems that rely on expansion until something breaks. And third, the future will be decided not by who owns assets, but by who controls the flow of debt that defines their value. The warning is simple: invisible debt grows in silence. And by the time the public sees the consequences, the decisions have already been made. If you want to stay ahead of the next shift, understand the patterns, question the official numbers, and never ignore what governments refuse to put on the balance sheet. For more breakdowns on the hidden financial forces shaping the world, subscribe and stay tuned, because the next chapter of this story is already unfolding.